All right, I'm going to do a quick update on the stock market bubble, the correction we're in. In my previous videos, I noted that most of the time a daily cycle low will break the cycle uptrend line, and usually it closes below it. We've completed that parameter today. The S&P, it actually broke the trend line yesterday, but it didn't close below it, which made me suspect that we still had further to go. Most of the time, as I said, the price will close below it. So it did that today. So the parameter's been met. I've noted again that during the advancing phase of an intermediate cycle, price tends to bounce pretty quickly from oversold conditions. So we're oversold on the 5-day RSI. So we should bounce pretty quickly from this oversold level. This is already a very stretched cycle. I noted when this was ongoing that the market tried to move down into the daily cycle low here. It was starting the process. The Fed just pumped a bunch of liquidity into the market and stopped that prematurely because they had a Fed meeting here on the 28th, and it's their job is just a lot easier if the market is going up, or better yet, if it is at all-time highs for those FOMC meetings, than if they don't want to make any moves or change any rhetoric. Then it's just easy to do that. They're not really forced to make any tough decisions. So no surprise here that the daily cycle low that was trying to get started right here was aborted. And then we had the State of the Union address at the end of the week, and of course there's no way they're going to allow the market to tank right after the State of the Union address, so pumped up some more. But ultimately, the corrective move that needed to happen is happening, even though it's occurring as a really stretched daily cycle. Another parameter that I usually like to see before I try and call a bottom is that the McClellan oscillator will get oversold. And you can see after today, we have achieved that. Most minor daily cycle lows, and even some larger intermediate cycle lows, they tend to bottom between minus 60 and minus 80. It's the major crashes like we had in March or the December swoon in 2018. Those can generate more intense selling pressure, but I doubt that we're in that this time. As I pointed out, this is an ultra right translated daily cycle, so pretty unlikely that it's going to morph into some kind of major crash that could then turn into an intermediate cycle low, something that could push this down to minus 100 or minus 120. The odds don't favor that anyway. So at this point, really late in the daily cycle, oversold on the RSI, oversold on the McClellan oscillator. I think we're within a day or two of a bottom, and it's even possible that we may have bottomed today. My best guess is that maybe we get either a narrow range day tomorrow that turns out to be the bottom, or maybe a gap down in the morning, which would represent a maximum panic capitulation type selling, and then that the selling exhausts itself and we get a reversal into the close tomorrow. So I'm kind of looking for one of those two scenarios, but it's also possible that we just completed the bottom at the close on Wednesday, and that would be it for the daily cycle low. We'll just have to wait and see. But like I said, I think my preferred scenario would be either a narrow range day tomorrow that makes a marginally lower low, or some kind of a panic capitulation gap down that's reversed and closes in the green by the end of the day. All right, so here's the NASDAQ, and as I predicted months ago that we would have at least one volatility event, and I think we're probably going to have more than one, probably two, another one later in the summer or early fall. But anyway, we are clearly in this volatility event. 14,000 has um, turned out to be a stiff resistance level that price is struggling to get through. It's failed twice now to get through that and produce a sustained move. I suspect that once this daily cycle low here is done and we get the third test of 14,000, I think that will give us a sustained breakout and probably start the melt up phase of a final bubble. So this is doing what it needs to do. It's resetting sentiment. At this top, sentiment was extremely bullish and probably too early to um, begin the melt up phase. Um, Again, when we broke out right here and started this powerful run, I saw lots and lots of people panicking, thinking they had missed the move, and I was pretty sure they had not missed the move. And now that we've got, up here, everybody was um, panicked and uh, panicking into the market, afraid they would never get another shot to buy, or they were panicked because they wanted a pullback in order to get in ahead of the melt-up phase. So sentiment was extremely bullish in here. Now that they've got the pullback that they were looking for here, now everybody's afraid to buy. Kind of weird how the human mind works. And, up here when everything's moving higher, everybody wants a pullback to buy. Then when they get a pullback, they can't pull the trigger. But I'll say it again: that the sky is not falling. We had the second worst bear market in history in 2009. I've noted before, markets work like a pendulum. The further you pull it in one direction, the more violent the reaction in the other direction is. So, second worst bear market in history. I suspect we're going to have one of, if not the greatest bubble in history off of that huge bear market in 2009. And certainly central banks around the world are printing plenty of liquidity to power a mind-blowing bubble phase. And I don't think there's any way at all that this, that the bull market from the second worst bear market in history is going to end in a whimper. I don't think so. I think we've still got a huge melt-up phase that's going to be driven by literally trillions of dollars in liquidity, and that is still ahead of us. And I think this sideways consolidation is just clearing sentiment and setting the stage, building the fuel for that final melt-up phase to unfold. So we're just still in this volatility event, but I think it's going to be over here pretty quickly. And I think this daily cycle low that we've been in here for the last couple of weeks is probably going to end by the end of this week, certainly by the very beginning of next week. And then we'll either remain locked in this volatility event for a little longer. The sideways consolidation in 99 lasted like 6 months. So this is pretty tame compared to what happened in 99 before the melt up began. But personally, I don't think it's going to take that long. I think once we start this next daily cycle, I think we're probably going to get a breakout and get going.